I would now like to hand over to Gabriel Bernardino, who will chair our panel discussion on addressing the insurance protection gap. With that, over to you, Gabriel.
Well, thank you very much. Good morning, good afternoon, good evening to all of you. Welcome to this last panel on addressing the insurance protection gap, a very important issue and also quite related to what we have been hearing in this previous panel. So to guide us through this discussion, I've got the enormous pleasure of having three distinguished panelists that I will present very quickly. Firstly, Ekosoi Yahen. She's the Secretary General of the Insurance Development Forum, a very important actor, I would say, in all that is related to these matters. Secondly, we have Arup Chatterjee. He is the Principal Financial Sector Specialist in the Asian Development Bank. And last but not least, we will have Patricio Espinosa Arias. He's the head of Insurance Regulatory Division in the Comisión para el Mercado Financiero in Chile. So welcome to my three panelists, and I'm sure we're going to have a good conversation this afternoon. So as a kind of introduction to this matter, just wanted to say a few words, and we all know, of course, that the insurance protection gap has been our agenda already for a number of years, and I think it's only the fact that we COVID-19 pandemic we highlighted the importance of insurance. I will say of the that we have in our societies. There are evident cyber, climate change, and also pandemics. And these are all natural now this is of course probably more pronounced in emerging markets, and we will go to discuss that in the panel. Let me also say that this is a global issue. It's not only about emerging markets. When I look at, for example, in Europe, natural catastrophes, we just published a pilot dashboard on catastrophes, and the protection gap is huge. Even in Europe, we have down 35% of the cost associated with it's not it's of this there's probably not enough capacity of the insurance market itself to cover these risks. And so, in this sense, it is essential that public and private entities engage, that public and private solutions are put in place. And let's be honest, there are solutions. We see a lot of being implemented throughout the world. We have very good examples today about some of these examples. I mean, not for is also very good a road to multiply these good examples, and that I would like also to discuss with my panelists today. So, without further ado, let me start the conversation with the first round on looking at the protection gap in emerging market and development economies. And I will start with Ekosoi. Why is the protection gap more pronounced in emerging markets and development economies? What are the issues that you confronted along these years that have most on protection gaps in the development.
Thank you very much, Gabrielle, for the introduction, and to the other panelists and also the IAIS community for really the opportunity to be able to share here. And you've raised a very good question, Gabrielle, and I think I would want us to also reflect on some of the comments that you just made, which is that this is a global problem. As you said, when we look at Europe, it's 35% in terms of kind of the available insurance protection, the protection gap. We only have 35% really covered. But when we look at developing countries, that's really that number reduces to 1 to 3% in terms of insurance penetration rates. So that hopefully gives you a sense in terms of the order of magnitude of the problem that we are dealing with. But there are a multiplicity of factors that influence why the protection gap is more pronounced in EMDEs. But I would probably just want to focus on 3 and elaborate. 3. The first that I would say is that risk awareness and understanding is often very low in many of these jurisdictions. And what do I mean by that? I think that all of us can agree with global populations and wealth past decade. And this has also come with it an increase in terms of the potential poor understanding of the risks that are being generated. And also, when we think about the levels of urbanization that's taking place across the globe, is this development actually being kept, or is the development that we are seeing also aligned with the development of proactive strategies to help manage these risks, and also the availability of risk transfer, risk financing solutions? As you mentioned, I think that COVID has been a really instructive experience in terms of really showing, I would say, our systems, the fact that for many countries around the world, we don't really have systems in place that really think proactively about how we are managing our risks, financing response to these events when they occur, and are the decisions that we are taking in terms of prioritizing our financing actually based on evidence, right? And so these are some of the issues that I say kind of drive the increase in the protection gap that we're seeing. Issue that I think is also quite important in this thinking is that in the discussions that we are having, prevention and risk reduction, as it should be, often optional in many countries. And it's an unfortunate situation because these things are not mutually exclusive. Finance is one part of the solution, and it's an important, but oftentimes there isn't necessarily an acknowledgement of what this risk is on the books in terms of a liability and then how to deal with it. So questions arise around, okay, if we are talking about, risk or drought risk that a government is facing, there's a lot of work that is done to unpack who actually owns that risk, who takes decisions in terms of managing that, who pays, how is the private market into what the governments are actually doing this risk. So what all ends up happening is that when you do have these disasters occurring, the governments have to deal with that liability and absorb that shock on their budgets that are already significantly constrained. So funding that would primarily go to education or health or other active development activities is then pulled in response. And so you have really a negative cycle developing. In addition to that, we can then look at it at the level, which is that households also are then left to absorb this shock and are left to the international community on response. So there's a lot of questions that we have to think about the cycle that we have and how do we break it? How then do we treat to the availability of risk transfer, risk insurance, insurance for these governments, but also the communities? The third point that I would raise in terms of why we are seeing the challenges in terms of the protection gap and an ever-increasing protection gap, in many circumstances, there is a challenge in terms of actually taking this risk and turning it into something that's insurable and something that you can actually provide cover that is affordable, accessible, and viable for the communities about that are particularly vulnerable and just don't have that kind of discretionary income. So it's difficult journey. It's also one, as you mentioned, that really requires public-private collaboration. Now, perhaps in a particular case that we're working now, where we have a government in West Africa, and they're very interested in developing a flood insurance for a particular city. But in working through this engagement with the government, there are lots of challenges in actually doing that and developing a product that is meaningful, useful, and actually sustainable. We are faced with a lack of accessible historical loss data, despite frequent floods, patchy hazard and exposure data, outdated public assets registry. So at the same time that we are talking about the provision of new solutions to address the protection gap, we're also dealing with real challenges in terms of how is this risk understood? How is it being managed? What are the investments being made to actually reduce that underlying risk in order to make the availability of these insurance products even, even better? And so those are just some of the challenges that I think kind of underscore what we are seeing in terms of the protection gap. And all of this is also taking place a backdrop where you do have companies that must have a commercial rationale for engaging in these kinds of projects. And so it's really a journey. It's a complex one. And for many of these countries, it requires real public-private collaboration and engagement with governments, with regulators, etc., in terms of how do we treat to this issue in a much more proactive way, because it simply is not tenable and we really need to accelerate our efforts. So I'll stop here for now, but those are my reflections on those three themes, which I think are quite critical.
Yeah. Very good, Ekosui, and that's clearly an issue, of course, of the old risk management and from data, from intended to to solutions that are mutually acceptable from a company process. What are the reasons for that, in your opinion? To unmute, Aru. We're not listening. Yes.
Well, I would like to start from where Ekosui ended. We do not have social protection mechanisms in place in Asia. If we see the major types of assistance which ADB granted to member countries post-disaster was mainly in terms of providing social assistance, because of lack of social security related support to the citizens, and these are in the form of unemployment benefits, discounts on food and utility payments, looking at even PPEs and minimum level of hospital equipment, and also senior citizens and women who also did not have even the meager pension which the government provided. In terms of health insurance, also we found that one of the problems with Asia is there is a lot of informal employment. So as a result of that, a lot of this health insurance and all is very, very informal. People still rely on family and informal structures. So health insurance mechanisms are not in place. And even where governments have these systems, there is a long queuing problem, So that is another issue. And then we also find, so there have been a number of measures which the governments took. And in addition to that, the regulators also took a few measures. In terms of the measures which the governments took, was in terms of allowing withdrawal of pension benefits, provident fund contributions the subscribers made. But then to correct one gap, you exacerbate another gap, because you need pension money at the old age. So how do you, and then there was not sufficient financial education in terms of the consequences. The regulators took measures in terms of deferment of insurance premium, especially where there were premium loans and things like that. But the people do not still know the consequences of that. Once the premium moratorium ends, what would be the consequence? Because if they don't pay that premium upfront, they will be left uninsured. So those are the types of issues. When you talk of course, Asia has had the experience of pandemics in the past also. And based on past experience, we have seen that the take-up of life insurance and health insurance increases. So in a sense, there is greater appreciation of the role insurance can play and should play. But the negative perception amongst people is disappointment in terms of the existing coverage, the lack of new solutions, because in this crisis, there was a loss of income. It was not accidental damage which created losses. So those products were not there. So they are looking at new solutions which the insurance industry can offer. And definitely there was lack of preparedness for this crisis. And also they don't know what will happen if such crisis prolong in the future. In terms of the problems which the governments face, I think the markets, if you see the insurance markets, the insurance players do not have deep pockets. So as a result of that, they are very, very hesitant to underwrite catastrophic losses or pandemic losses. And they do not have this facility in terms of cross-sectional pooling mechanisms in place. So the insurance companies have never encouraged selling of catastrophe products like earthquake, flood, and all. And they are all part of fire insurance products. It is not compulsory in many places. So people don't know after a catastrophe happens whether they are insured or not insured. So, and the governments have been trying to also not avail the facilities of sovereign risk insurance, something what Ekusei mentioned, and they try to fund losses from their taxes, and because these losses are all localized in nature when you have a catastrophe. But in the case of a pandemic, when there are nationwide implications, I think government is also slowly realizing in terms of the limitations to borrow and use revenues to fund such losses. So in terms of moving in the future, I think pandemic crisis risk is something which will be very difficult to insure because of this extreme aggregation and accumulation of risk associated with pandemics. But we might be able to come up with options where we can look at insurance of epidemics. And we need to look at specifically in terms of loss of income and loss of livelihoods, which matters a lot, especially for informal workers and also for the gig economy workers. And finally, to conclude, I would say there is a role not only for the non-life insurance industry in this space, there is also a role for the life insurance industry also, because insurance ultimately has to deal with managing the residual risk, the risk transfer. So unless you introduce risk reduction mechanism, good infrastructure in place, and that is life insurance companies can contribute in terms of bringing the ESG principles more into play and ensuring that there is investment not only in hard infrastructure in terms of better roads, but also in the social infrastructure, what we have seen during the crisis in terms of health, in terms of hospitals related to health, schools related to education, and things like that. Thank you.
No, thank you very much, Arup. And I really understand that, of course, it's an issue that the regimes in place on, of course, also on the financial education, but definitely also on the capacity of the industry, the development also. But I was interested in a couple of points that you made, and we'll probably come back on that on going to the future. Now, let me go to Patricio. Patricio, what strategies has Chile adopted to close the protection gap? And I know that particularly you have been working in relation to natural catastrophes. So can you share that experience with us, please?
Well, first of all, thank you for the invitation so that Chile can show its work in reducing the insurance protection gap. I would like to mention 5 regulatory measures that have been proposed and adopted to deepen the use of insurance against catastrophes, particularly earthquakes. The first one corresponds to an improvement in the regulation on claim settlement after what happened with the 2010 earthquake. Some of the main changes were the inclusion of settlement rules for catastrophes and the incorporation of new technologies, which is translated into more expeditious, massive housing liquidation process. The second measure that is worth mention is the enactment of a law, 2012, which established a mandatory tender for the insurance that financial institutions require against earthquake from mortgage debtors. It is important to mention that the result of said law was a significant drop in the insurance prices observed in tenders. This was mainly due to the reduction in brokerage commissions. A third measure was the establishment by law in 2015 of the requirement for compulsory fire and earthquake in insurance associated with the infrastructure of private schools that receive state aid, thus expanding coverage against this catastrophic event. A fourth significant measure was that in 2018, the World Bank issued bonds for $1.36 billion to collectively provide protection against earthquake to the countries of the Pacific Alliance, among which are Chile, with a tranche of $500 million US, Colombia, Mexico, and Peru. Finally, I would like to mention that the CMF sent to Ministry of Finance in 2019 a bill that empowered the CMF to regulate parametric insurance, which would allow companies to offer much more accessible coverage against catastrophic events. It is expected that if the law is enacted, of course, premium catastrophic insurance are expedited marketed in Chile. It should be noted that in no way this insurance company cannot sell parametric insurance because say insurance does not comply with the compensation principle established in the Chile's commercial code. Thank you.
Thank you very much, Patricio. And so, good examples on, on how to deal, of course, with this, for example, earthquake risk. Can I go now to Europe to see, in Asia, also some good examples of different risk management solutions? So can you provide us some examples of public-private mechanisms that have been adopted in Asia to address?
Okay, well, as I mentioned, the major response to the crisis was in terms of post-event aid. But there are also mechanisms in place in many countries where governments provide reinsurance, some places where governments provide insurance, and also governments provide social insurance through their public sector insurance companies. So these are the three ways which it happens. And there are also risk-sharing mechanisms which are in place in many countries where the community-level players also bring in insurance. And I would like to start with from the bottom that way. We have had examples where mutuals and cooperative-based insurance models have been very successful and have responded to this COVID crisis. Something which was undermined earlier, I think the community responded in a very, very proactive way post-crisis after COVID. And not only they helped in reducing premiums, but there was a lot of education involved in terms of better hygiene and things like that. And also in terms of following other risk reduction measures. So definitely that is something which needs to be further explored, and we need to look at how these community-based institutions can be strengthened. In terms of public sector insurance, also in many countries, especially agriculture and health insurance is under the remit of public health insurers. In India, we have one of the largest insurance schemes where we have 100 million households, 500 million individuals insured under a state-run health insurance scheme. And that is quite mammoth in that sense. And under that scheme, if we look very, very specific to COVID, the COVID treatment was covered. Of course, there are issues in terms of accessing those facilities, but more or less people were satisfied, especially the low-income population. So those types of mechanisms have been successful. The regulators in these countries have also taken a proactive role in terms of ensuring contract certainty, because what is covered and what is not covered in terms of pandemic becomes important. And that is also something which they need to be commended for. There are also national level insurance pools in other countries on agriculture insurance, where a lot of weather risks are getting insured. One of the problems with that is there is a tendency with respect to looking more on parametric type of products for speedier settlement of claims, but there are a lot of basis risk issues. So today we find a lot of new technology being used to understand the risk better, calibrate risk better, price premium better, so that insurance becomes more affordable, accessible, and reliable, which was already mentioned. So that is something which is there. At a regional level also, there are regional pools which are being established, especially for sovereign risk insurance. We have a Southeast Asia disaster risk insurance facility set up by the World Bank with the assistance of the government of Japan. In the first phase, they are looking at insuring sovereign flood risk. And so those types of mechanisms would work, but that is very, very specific to the ASEAN that way. But we need to look at similar examples in other countries. The Asian Development Bank is currently working in Central Asia to set up a financing mechanism which will look at both pandemic and catastrophic losses. And that is something we are looking forward. We are still in a dialogue stage with the countries and our counterparts, but that is something where we might be able to come up with some innovative solution.
That's excellent. That's excellent.
And I think finally, to conclude from a supervisory perspective, one point which I would like to make is, of course, there are a lot of new types of mechanisms being set up, but the supervisory remit is not properly known. So who will, especially for regional insurance mechanisms or insurance mechanisms where more than one country is involved, one is really not sure whether these mechanisms help in creating market and also in crowding in private players. Thank you.
Well, thank you very much, Arup. If I may, just one further question to you, because you mentioned, of course, your experience with the Asia Development Bank.
I can't hear you.
You make reference to the experience with the Asian Development Bank. And this is, of course, a very important player. Are you listening to me?
Yeah, I am listening to you, but the first part I
yes.
did not hear.
Okay. No. Just to mention that, of course, the development banks can play an important role, and as we have seen through the Asian Development Bank. And so, what are the lessons that you can tell us that for the engagement of development banks and in incentivizing these mechanisms, because you are very often closer also to the public authorities?
Okay, so I think that's a very nice question. We are at this moment, our work is looking at the enabling environment for insurance and disaster risk financing. We are looking at different types of regulations which either enable how they can enable introduction of not only new products and new mechanisms. We are also looking at what we call the contingent financing gap in these countries also. We are trying to measure what the public sector can provide and then what they cannot provide, and how we can stretch or extend the envelope through reinsurance and risk transfer mechanisms, both, and also using the capital market also in terms of catastrophe bonds and other insurance-linked security structures. So that is one element. We are also producing a lot of regional public goods. As Ekuswe mentioned, the understanding about the risk is not very, very complete, and therefore we need to educate a lot of our policymakers and supervisors and others in terms of the practices and how they should look at it. We are also looking at the role technology can play and how technology can make a difference in terms of reaching the last mile and also in better risk calibration. Yeah. Data is a very, very big issue. Because if you have to introduce these products, we need a very good, accurate sense of the risk in terms of the data. And this is something which is not available. And even when it is available, it is not in the form and manner in which the insurance companies and reinsurance companies find it acceptable. So we are looking at that. Specific to the COVID, we are also highlighting the role of pandemic risk modeling also. Yeah. And in terms of building structures in place to collect data and retrieve data so that they can be analyzed properly.
Very good, Arup. That's a very good experience. And I think that can be taken as an example also to other development banks around the globe. Let me turn now to Ekosui, and you have been, of course, in the forefront of, implementing some of these mechanisms, public-private partnerships throughout the globe, and I'm sure that you have good examples of innovative and successful ways of, of dealing with, of course, these sustainable climate goals, but also that can be used for protection gaps. So, can you tell us a little bit about that, and also coming to one question that we have in our chat, which is the role of digitalization in closing the protection gap, which I think links quite well with this point on innovative solutions. Please, Ekosui. Are muted. Can you please unmute?
Yes, thank you, Gabriel. I was just saying that I will probably just elaborate a little bit, drawing on some of the comments made by Arup on the role of the multilaterals, because I actually think that is quite an important point. I've been involved in structuring a number of these regional pools. And for these pools, the banks have actually played quite an important role in some instance in terms of not only the technical assistance as it relates to the structuring, but also sometimes in terms of premium financing, because you do have governments who are severely financially constrained. And so for some of these initiatives, we've actually had programs implemented where you have a cascading kind of premium financing support, which then allows the government to build the cost of the premium into their budget. In other instances, it has gone towards maybe supporting the capitalization of these regional risk pools. So I just wanted to highlight that point. In terms of the specific question, in terms of some of the other kinds of innovative ideas involving public-private partnerships, I'll elaborate perhaps on one which the IDF has initiated last September at the UN Secretary General's Climate Action Summit. And this agreement was between the German government, the United Nations Development Programme, and also the IDF. And it really was structured around building on the experiences that we have, in the sense that for many of the governments that we are talking about, there are already quite extensive conversations happening between these governments and the development partners, if it is the UNDP or the World Bank or the Asian Development, etc., around their national adaptation plans, their national budgets, around their risk financing frameworks. And so a question that we have is, how do those frameworks, say if we talk about national adaptation plans, how do they treat to issues of risk and the role of insurance and risk financing? And what we found is that there is a need to kind of ramp up and enhance the level at which these issues are really tackled in that engagement. So that's part of why we thought that this partnership with UNDP, BMZ, and the IDF members was critical, because the UNDP has offices right across the globe. They're already engaged in these discussions with governments. And so there was a role that the industry could play in terms of working with the UN partners to strengthen their capacity as it relates to insurance and risk financing and risk insurance solutions. The German government obviously is very interested in this because, again, there's an element of this that requires technical assistance, and who funds that work. And I've talked and elaborated earlier on my interventions around some of the really fundamentals that need to be done in terms of understanding the basic risks that exist so that we can develop the kinds of solutions that are needed. And so BMZ is part of this agreement and has committed to providing financing to drive a technical assistance program. And this is all with the aim of how do we accelerate the discussions and the engagement that we have with countries around insurance and risk transfer solutions to help them address the protection gap. And so as part of this agreement, we have identified 20 countries where we are structuring deep engagements with them through to 2025 to try to address this issue. And the IDF industry members, their commitment is to match the funding provided by BMZ for this technical assistance in kind, also offered risk capacity of $5 billion, and also supporting the development of the underlying open risk modeling infrastructure to enhance the availability of meaningful risk information. And so for us, this is quite an important initiative because it builds on the lessons that we have in terms of the complexities of actually structuring these programs. It draws on the strengths of our public sector partners who are already having conversations with governments around this issue. And importantly, it also seeks to leverage the skills that the industry possesses. So in the past year, since we signed these agreements with BMZ and UNDP, we've engaged the UNDP offices across 21 countries around this theme. We've gotten commitment already structured with the German government, and we've also mobilized considerable resources within the industry to support this endeavor. And so one may ask, what does this look like on the ground? And I'll just highlight a project in Peru, which we kickstarted earlier this year. And this project was a request from the Ministry of Education and the Ministry of Finance in Peru, where they had emerged out of the 2017 El Nino experience and significant damage done to schools, children out of schools for a considerable period as government was trying to reconstruct and rebuild this infrastructure. And so the question to the IDF members was, can we work with them to look at structuring a potential coverage for 50,000 public schools across the country? With this request, what we did was pull together a consortia within the IDF community, working with the Ministry of Finance, working with the Ministry of Education, but importantly, also the Insurance Association of Peru, because a critical part of this is how do we also build domestic insurance capacity to actually address this complex challenge. And so in thinking through this project, we had to reflect carefully about how are we working with the government to think about kind of the procurement process, if we think about when disasters occur, and how do we put measures in place so that when the events happen, you can actually get into reconstruction as quickly as possible. How do we build back build back better standards into the thinking that's already taking place so that when we do build these new schools, they are better than what we had before. But an important part of this was also thinking carefully about, to the point about digitization. How can we leverage technology? Yeah. And so part of the project was about actually with an insurtech firm to actually do a mapping of these public assets, the 50,000 schools. What do they look like, right? What is the state of that infrastructure? And you build a database of critical government infrastructure assets for the government, and they can use it for the insurance purpose, but its application is much wider than that. If we think about it in the insurance context, its application is relevant in terms of claims administration, just understanding what your assets are, what the risks and exposures are to that asset. And so for us, it also paves the way in terms of what could potentially be done in terms of securing other public assets. And so for us, these are the kinds of programs that we want to do more of. These are the kinds of partnerships that we think are critical in terms of leveraging local expertise, technological expertise, international markets, but also domestic actors who actually have to own these programs. And so, but I say all of this, but I also want to highlight another element, which is that The reason why we need these partnerships is because these endeavors are complex. They are difficult. We also face political challenges, right? And shifting political tides within governments in terms of their appetite to engage with these issues. And so as much as, we have these ideas, there's a lot of impetus and interest to do more, to engage. There is that reality that we have to contend with. So for me, as we think about how do we accelerate our efforts, I think that there's an important component about effective learning. Collaboration is also essential if we're actually going to be able to structure things that are meaningful and fundamentally also accelerate. Because when we talked about, earlier, Gabrielle, you mentioned when I mentioned 1% in terms of insurance penetration and the fact that we have an expanding protection gap, we have to do more and we have to do better and we have to do it faster. And that requires collaboration. So those are my reflections.
No, very good. Thanks a lot, Ekosui. Quite clear. If I may, pose you a little bit of a thorny question.
Yes.
Why don't we have more of these public-private partnerships? That public is not aware, doesn't make the enough pressure. Actually, there was a question that shouldn't we go to more media coverage to put these indicators of resilience gaps in our society more out there in the media. So it's more about lack of public pressure. Is it because of lack of understanding politically? Let's be honest also. Or is it also sometimes lack of interest from the side of the industry? So if you need to pick one, what would you say is the most relevant one?
I can't. That's a difficult question. I can't say which one is the most relevant. I think it depends on the context, right?
Yes, indeed.
It depends on the context. But the points that you've raised are all extremely relevant, which is that there is a considerable amount of work to be done on public education as it relates to the relevance of insurance. A point that I made earlier was that in many of these contexts that we are dealing with, insurance is not a given, right? When we live in, I say in London, or if you're in a developed country, insurance is built into the system. In many of these countries, that's not the case. And so you have to sell the insurance. That's one issue, right? It's not a given. The second issue is that we're also dealing with different, I would say, political economy contexts. For many countries, when you do have these disasters, there's a cycle where, I hate to say this, but if you wait long enough, the international assistance eventually arrives. It's not enough. It's never enough. And there are questions around the efficiency of that, right? But it also means that you have to change the mindset within the public policy process about how it treats the risk, how it owns that risk, how it accounts for it, and how it finances it. And that's a long-term kind of strategy. And then the third point that you raised is political, right? What is the appetite to engage politically? We're talking about insurance where you pay now for something in the future that you don't know, right? Yes. And there are other instruments where you can get a loan and you defer the payments to the future. So it's aligned with a political kind of thinking. So the issues are quite complex, which is the point I was making, which is why you require a variety of partners at the table, which makes it difficult to execute, but essential if we are talking about sustainability. And so for me, that's where I think we need to be thinking. And I would say that part of the challenge is also that, again, we talk about public-private partnerships, but it's not easy to craft how does this work in reality? How can you make sure that institutions are comfortable engaging with each other? And I skimmed over it when I talked about the tripartite agreement with UNDP, BMZ, and IDF. Yes. But there was a lot of, and I characterize it as boring work that had to be done to think about how can we facilitate the rules of engagement so that this can actually happen. But that is work that actually needs to be done in order to allow for you to move to the next phase of engagement. Thank you.
No, thank you very much. Very nice way of surrounding the question. Sweet. You, Patricia.
Yeah, well, due to the increasing cost of mandatory health plans, people have increasingly started to purchase supplementary health insurance of the voluntary nature in such a way as to close the coverage gap and reduce the expense that must come out of people's pocket. Notwithstanding the above, a significant protection gap is still observed in both types of insurance. Additionally, as a result of the appearance of COVID-19, this gap has grown, considering the consequences that the pandemic has had on the health and mortality of the population. That said, I would like to mention two specific and targeted measures that have been proposed and adopted to deepen the use of life and health insurance in the context of the pandemics. The first of the measures corresponds to a bill that was presented in November 2020, which established the employers must hire individual health and life insurance for all those private sector workers who must return in person to their job. This obligation, which must be paid by the employer, will apply during the time that the health alert associated with COVID-19 is in force. It is worth mentioning insurance can be contracted in any of the insurance company authorized to cover health and life risk. Regarding the coverage associated with the life insurance, this corresponds to a payment in the event of the death of the worker whose basic cause of death is COVID-19. On the other hand, with respect to the health coverage, the compulsory insurance will compensate an amount equivalent to 100% of the payment for hospitalization expenses incurred in the assistance network. However, by applying such insurance only to the private sector, public sector workers would be left without coverage, which implies a relevant challenge for the Chilean state. The second measure corresponds to an agreement between the Chilean government and the Chilean Association of Insurance announced in May 2020, from which it began to provide free life insurance to workers in the public health sector, which in Chile correspond to approximately 235,000 people. Thank you.
Thank you very much, Patricio. Maybe I will come now to the three panelists and with one question in terms of what do you think would be the most important role providers? You give questions around again. Can I start with you, Ekosi?
Okay, thanks, Gabriel. I would say that the discussion that we've had here this morning hopefully sheds light on the fact that the protection gap is real. And more than ever, we need solutions, and we need urgently to begin to think through what those solutions are, the new solutions, but also maybe some tried and tested. And as we all know, insurance has to be part of that because it's a global challenge and we need it. And there are skills and capacities that exist and the discipline of insurance that can be brought to bear. And I would say from my perspective, I perhaps maybe would focus more on the technology elements, which we hadn't really delved into. I think that that's an important component. Again, not a silver bullet, but I think I would urge regulators, legislators and policymakers in this space, update key laws and regulations to enable the use of technology-driven insurance solutions. For example, consider ways of streamlining authorization for innovative approaches to sovereign risk, such as regulatory sandboxes, updating regulations of intermediaries to accommodate new forms of insurance distribution, particularly to sovereign entities. But beyond just the regulators and policymakers, I'll also issue a challenge to insurers. I think that as an industry and a community, we need to also think carefully about the products and services which are needed within these markets. There will be significant difference between and within markets, so we need to give due consideration and acknowledgement to that and the different needs and interdependencies between low-income and emerging middle-income segments within these countries. But I also think that there is also a fundamental element of all of this, which is trust. Right? A need for continued and maintained building of trust between the industry, regulators, consumers, and stakeholders in this process, because we are also at a time where we have to learn and we have to innovate. And this will actually require us to maintain that trust in order to make sure that we are doing right by the consumers and the countries ultimately. So those would be my reflections in terms of what I would ask of regulators, the insurers, but also policymakers generally.
Very good. I think that's something that it's fundamental for sure from a regulatory perspective. Arup, also on this issue of what you believe the role of supervisors can be, but also with your experience on how can capital markets also be used to facilitate this kind of solutions.
Well, the insurance regulator definitely has to be part of the solution, part of the discussions. And many a times we have found that they are not part of the discussion. And there are a lot of things and schemes which are introduced without taking the insurance supervisor into confidence. And therefore, what happens at the end is there is an expectation gap, and it doesn't help in building and repairing trust, which an insurance supervisor is supposed to do. The second thing is, of course, the protection gap. We require multi-sectoral engagement, and the responsibility should not be abdicated to the insurance supervisor. And that's where I'm talking of the role of the insurance market and the capital market together in terms of coming up with solutions, not only in terms of investment, but also in terms of risk financing. And in many of these emerging market countries, the capital markets are not developed, and that is also a big hindrance. We cannot bring in capital market solutions, long-term financing into these countries because of the lack of development of capital markets. So ADB is working in these areas also in terms of having regional capital markets in place to issue regional bonds so that small countries can benefit. Of course, that is more in terms of infrastructure development. We are looking at green bonds, social bonds, and all. But then, as I mentioned, around the CAREC facility, we are also looking at using regional financing mechanisms to see if bond-like or insurance-linked securities can be introduced. In terms of technology, again, definitely technology would be the backbone to reach not only the last mile, but also introduce different innovative solutions. And that is something which has already started in Asia. I think there are a lot of shoots which are emerging, which are visible that way. There are examples where there is peer-to-peer insurance. So I was talking about these mutuals and cooperatives. So peer-to-peer insurance based on a blockchain platform with smart contracts can lend that necessary transparency also in terms of ensuring that these players which are coming are not runaway operators in that sense. So that is one. Of course, then we are not only using financial technology, but a lot of new technology like remote sensing and all, which is also very important to introduce new generation insurance like parametric covers, especially culture insurance and catastrophic insurance. Those are definitely issues. And in Asia, the regulators have already been very proactive and also progressive. Sandboxes are there in many, many jurisdictions. And they are looking at ways and means in terms of how more innovative solutions can be sold. We have also encouraged, as ADB, a lot of pilots. And in many of these insurance pilots, technology has been used not only to not only for underwriting purposes, but also for claims purposes. We have been collecting premiums through a mobile account, settling claims through a mobile account, using remote sensing technology and things like that. But we need to develop capacity beyond insurance also. The entire ecosystem needs to work in sync. All the stars need to be aligned. Otherwise, as in Asia, they say they leave everything to karma.
That's a very good one. And we don't want to leave things to karma, definitely. Patricio, now with you, and what has been your experience being a regulator in the engagement in these solutions to build mechanisms to deal with protection gaps in Chile? So do you think that the role of the regulator is an essential one?
Yeah, indeed. The main challenge faced by regulators in developing countries like Chile is to close the insurance protection gap, is trying to create with the few resources and in conjunction with the public policymakers of the respective government, innovative programs that allow the population to have a greater access to different insurance coverage. This implies that people actually understand the coverage that is being offered to them, fair treatment from the insurance companies, both in the sale and in the post-sale in the event of the insured claim. This is very important. In the context, Chile's participation in the IAIS has allowed it to access the different development that have been carried out in terms of reducing the protection gap. And this in turn help us to share experience with the regulator from different jurisdictions. However, the implementation of such programs should not significantly affect the cost of hiring the workforce, since the sector of the economy that had been hit by COVID-19 need to be reactivated. In addition to concern regarding the health of the public finance is very important. Thank you.
Thank you very much, Patricio. That's, of course, good experience. So we are approaching the end of our panel. I think that there were, the sharing of very good experiences, showing that there are good examples on how can we close the protection gaps that we have in our societies. But we all need to work more together. And I think that the message that I would leave at the end of this is that there's an urgency out there that we need to take care with us. And I think that it's a role definitely also for the IAIS and for the supervisors and regulators throughout the world to try to put these issues more and more on the agenda and to try really all through the public pressure to we not take so much time, I think, at the end of the day. So let's work all of us together to make sure that we can put many more of these good examples in place in the coming years. I think it would be a fantastic outcome for all of us as citizens of the world. Thank you very much for all the good references, good discussion from the panelists. Thanks, of course, for the audience. And back to you, Connor.
Okay, thank you, Gabriel.
Thank you, Gabriel. Good to see you.
Yes, indeed.
Mm-hmm. No, thank you, Gabriel. Thank you very much, Arup, Equishwe, and Patricio for the excellent discussion. I think I can speak on behalf of everybody who was listening in. It truly was excellent, and you really touched on some important issues that I hope we can see integrated into how the IAIS thinks about these issues coming into the next year. I just wanted to note, Gabriel, it's been an absolute pleasure to have you as a moderator again, and I'm very pleased we could call on you one last time to moderate at an IAIS annual conference. It's been a busy and challenging year for many, but I'm pleased that our annual conference and for our members, our annual general meeting has been able to highlight the IAIS's accomplishments over the last 12 months. Thanks in no small part to the efforts of our members and our stakeholders to maintain a resilient insurance sector during the COVID pandemic. I want to thank everyone on behalf of the IAIS for joining over the last few days. For those who did not catch yesterday's town hall discussion, recordings of both days will be available on our website very soon. I'd like to close on a personal note. I've had the good fortune to MC our milestone events for the past few years, a front row seat for which I'm very thankful. But in my current role, this will be my last year MCing an IAIS event. So I wanted to take the opportunity to say goodbye, to say thank you, and to really acknowledge how exciting it's been to see the participation in our events and the positive energy that our members and stakeholders have brought to the IAIS. While this year has not unfolded how many of us expected, I think it has been a year that has reinforced the importance of insurance, and the record number of registrants at over 1,000 that we had for this week's events clearly provides even more evidence. I hope we can enjoy a similar number next year at our 2021 annual conference. With that, I say goodbye, stay healthy, stay engaged. Thank you.
Thank you. Bye-bye. Thank you, everyone.
Okay,
Stay safe.
Goodbye. Thank you.